Damn, I want to bring the top hat back. 10 stocks that made absolutely massive moves this week. That's what we're talking about here today, guys. We're going to talk about 5 stocks that made huge upward moves this week and what those businesses actually do, and 5 stocks that made huge downward moves and what those businesses actually do. It's always an interesting thing to kind of maybe like once a week or once a month look at stocks that made huge moves upward or downward in that week or in that month. And the reason being is sometimes you can catch some stocks that are maybe falling knives that maybe shouldn't be falling knives, and sometimes you can see some businesses that maybe have went up too much and need to be shorted, or you can see some businesses sometimes that maybe there's a trend changing there in a big favor for that company, and you can hop onto the wave and ride that baby until it goes up to wherever it's going, guys. So I hope you guys really enjoy this. Make sure you follow me on Instagram if you have not already. All right, guys, let's get into this. The first one's called Signet Jewelers, all right? This stock went up 29.7% in the past 5 days, guys. So basically meaning if you put $10,000 in this, or let's say you put $100,000 in this stock, 5 days ago, basically now you would have a $30,000 profit. That's like sick, guys. So Signet Jewelers, what I found with this company is they own almost all the main jewelry stores you guys will know, okay? In your malls and whatnot, and the ones you hear on commercials all the time, they own almost all of them. Kay Jewelers, they own them, okay? Jared, the Galleria of Diamonds, they own it. Zales, they own it. They own almost all the main jewelers out there in the United States of America, guys. Very interesting business. Massive move this week, nonetheless. The next one up here is Carvana, which is ticker symbol CVNA, and this one's had an amazing year. Look at the year-to-date on this one, up almost 90% year-to-date. On the 5-day, up over 28% in the last 5 days. All 5 days were green. Unbelievable. Carvana, together with its subsidiaries, operates an e-commerce platform for buying used cars in the United States. The company purchases, reconditions, sells, and delivers vehicles. Its platform allows customers to research and identify a vehicle, inspect it using the company's proprietary 360-degree vehicle imaging technology. Well, that is pretty freaking cool. Obtain financing, warranty coverage, purchase a vehicle, and schedule a delivery or pickup. The company was founded in 2012, so not that long ago, and is headquartered in Tempe, Arizona. Pretty interesting business. I want to know in that comment section, have you guys ever used Carvana? Have you looked on Carvana? I would love to know from you guys down there. Next one up here is Vitamin Shoppe. Vitamin Shoppe, last 5 days, this one is up 31.73%, meaning if you put $100,000 in the stock 5 days ago, you now have a almost $32,000 profit just in the past 5 days. Vitamin Shoppe, through its subsidiaries, operates an omni-channel specialty retailer and contract manufacturer of nutritional products in the United States and internationally. It operates 2 segments, retail and manufacturing, okay? So not only do they have the retail stores that you guys are probably familiar with that are usually mall-based or around malls, that maybe sometimes they're even freestanding, but they also manufacture a ton of different vitamin products and protein supplements and things like that. So very interesting business model because they can kind of benefit whether somebody's buying, strictly a product Vitamin Shoppe makes, or it's a product maybe some other retailer sells, because they're also a manufacturer of so many different companies' products, guys. So interesting business model there, and I think it's helpful when if they were just a retailer and that's all they did, right? Their business could go away very quickly to someone like an Amazon online, right? But because they also are in the product manufacturing segment, that's pretty big for that company, guys. Next one that's made a huge upward move this week is Fitbit. Last 5 days, this one is up over 14%, all right? So Fitbit, as you guys probably know and remember, this is a company that makes all types of wearable devices that you wear for your health usually, okay? And basically they've had a ton of trouble over the past 2 years, 2-3 years, since basically Apple Watch came out. Samsung got in the space, the space just got really crowded, but mainly Apple Watch has kind of killed, a ton of momentum that the stock had going for it, a ton of momentum the company had going for it, and now it is a, let's see, $6 stock. So even after this huge move this week, it's still a $6 stock, guys. The question for Fitbit is, can they ever recover and get to a place where they're growing that business again? Last one as far as the upward moves, and then we'll look at the downward moves this week, is JCPenney's. This one was up over 18% this week. Holy smokers. JCPenney's, for those of you guys who do not know, they operate haunted retail stores. They're completely haunted. No, while I was taking those screenshots as a joke, I was thinking, I bet you I know how to make JCPenney pennies a profitable company. What you do is you tear all the clothing out of there, you fire the majority of the full-time staff, and what you do is you make all those retail spaces, just starting in the end of September all the way through Halloween, make them like a sick, like haunted house type situation. Imagine a whole store, like imagine how like epic that would be. They got all these retail spaces. I bet you they would make more money from that in that 1 month than they make from their entire year. Oh, they lose money, so they don't even make money in this business. I bet you that would be good, guys. Good idea there. Now to the downward movers. Zyme Networks, ticker symbol ZYME. So first off, this stock has had an amazing year to date. Look at it year to date, up 140%. That's an unbelievable move. The past 5 days, this one was rough though, down over 16% in the past 5 days. Zyme Networks is a clinical stage biopharmaceutical company that engages in the discovery, development, and commercialization of biotherapeutics for the treatment of cancer in Canada. Okay, the company's lead product candidate is ZW25, a novel bispecific antibody that is in phase 1 clinical trial for the treatment of breast and gastric cancer, guys. It's also developing some other products and whatnot. Very, very interesting stuff there. Biopharmaceutical companies, man, those companies, you can make a lot of money from them, you can lose a lot of money from them, because basically what happens is they'll have some promising, pill or formula or whatnot, and it'll go into, different phases that it has to get through in order to actually get out to the people, okay? And what happens is sometimes there's a lot of hope over one of these drugs, and the stock will go up a ton, and then sometimes these drugs end up not getting to go through, or they didn't work as they were supposed to work, and next thing you know, those stocks are absolutely killed, guys. So, needless to say, biopharmaceutical, not a place I usually spend a lot of time. It's just too dangerous, flat out, guys. Next one up here is Rev Group. So Rev Group, this one's had a rough year to date. Look at this one, down over 53%. It's lost half its value this year so far. In the last 10 days alone, this one is down nearly 11%. And this is actually a pretty interesting business model, okay? I've never heard of this company. It's pretty interesting. Rev Group designs, manufactures, and distributes specialty vehicles in the United States, Canada, Europe, Africa, the Middle East, and internationally. It operates through 3 segments: fire and emergency, commercial, and recreation. The fire and emergency segment offers a range of fire apparatuses, ambulance products, and municipal fire departments, EMS providers, and private fleets through dealers. The commercial segment provides transit and shuttle buses, school buses, mobility vans, and other specialty vehicles, including sweepers and terminal trucks. The segment sells its products directly as well as through dealers to municipalities, schools, and commercial and industrial customers. The recreation segment offers motorized recreational vehicles and luxury buses. This segment sells its vehicles through dealer to brand loyal customers and fleet owners. The company also provides aftermarket products and services, guys. Very, very interesting business model. I was looking in the business a little more, and they got a 7 PE in this company, a 7 forward PE, that is, 7 forward PE in this company. It's approaching MU levels pretty soon here. So, interesting business model, and one of those businesses that, like, when you look out, 10 years from now, 20 years from now, is this still going to be a highly relevant business? Absolutely. There's no question about it. Might be a business to look into there. This is like one of the few businesses I actually found when I was looking into this that I'm like, man, I might actually want to look into that. Next one up here is DHI Group. This one has fallen 16% in the past 5 days. DHI Group provides data insights and connection services to professional communities in the United States and internationally. Basically, they own a ton of different websites that are like want to be, I guess you could say, LinkedIn, and try to, connect business owners with people that are looking for jobs and whatnot. Next one up here is Lee Enterprises, all right? Lee Enterprises is down over 10% in the past 5 days. This business I never heard of, and I got to tell you, this is a miraculous business, okay? If you want to look for business advice, go talk to these people, okay? Listen to this. Lee Enterprises Incorporated provides local news and information and advertising services primarily in the Midwest, Mountain West, and West regions of the United States. It publishes 47 daily newspapers. Yes, you heard me. Daily newspapers, okay? And 0.8 million circulation units, as well as Sunday newspapers with 1.2 million circulation units and 300 weekly newspapers. It's a newspaper company, okay? This is a newspaper company. Like, how does this even exist? Look at this here. this company can still afford to pay over $1 million to several executives and 400,000+ to many more executives. And I actually looked into it, and this is a profitable business. Okay, I think they made somewhere around $28 million in profit last year on a newspaper business. If you want to ever search for business advice, go talk to those folks over there at that company. Go find their offices and say, can I be your intern or something? Because if you can make a profit on a newspaper business, like I don't even know how the hell that is possible in 2018. Never mind, you could afford to pay yourself $1 million+ and a bunch of other executives 400,000+. What? Like those are freaking business geniuses right there. That's all I know. Avaya Holdings Company. This one's down around 8% in the past 5 days. Avaya the Holdings operates a holding company which, through its subsidiary, develops business collaboration and communication solutions worldwide. The company was formerly known as Sierra Holdings. The company was incorporated in 2007 and based in Santa Clara, California. On January 19th, 2017, Avaya Holdings Corporation filed a voluntary petition for reorganization under Chapter 11 in the U.S. Bankruptcy Court for the Southern District of New York. It is in a joint administration with Avaya, so one of their subsidiaries filed for bankruptcy. That's always a confusing situation when one of those things happens, but it's always good when it doesn't take down the parent company. Anyways, I hope you guys really enjoy this today. Make sure you follow me on Instagram if you want to, hear me talk about many different subjects that I do on Instagram all the time. Thank you for watching. Have a great day.